Warning, the following program was produced for traditional broadcast television. Over 12 minutes of commercials have been removed, but interruptions are still included. Thank you for watching.
It's tax season, or I like to call theft season, and we're going to try to stay out of jail.
This is a real risk for a taxpayer, and when they sign the returns or sign any of these representations, it is going to be under the penalty of perjury. It's imperative that you don't wait till you get one of these notices and then have to figure out 10 years of your history. You should be, coming to a firm now.
Most of these people aren't necessarily trying to, there are some that are purposely trying to not be in compliance, but some of them, it's just ignorance and the newness of it all.
I understand the taxpayer side where they're just like, how am I supposed to comply with this?
Government officials insist we will continue to keep you informed as this story unfolds.
Welcome to the Money Block with Matthew J. Moore, the Bitcoin-focused program that's waking the masses to the fiat money Ponzi scheme. Money is changing, and your freedom is at stake. So stick around and learn how to empower yourself for this new digital age. Now, here's your host, Matthew J. Moore.
And so, welcome America, welcome world. Man, you are here at the right time, right place. This is the Money Block, America's syndicated Bitcoin-focused TV and radio show. That's right, we're on traditional media. We're all over the place on BizTV, coast to coast. So welcome all of you Bitcoin newbies, lovers, and experts. And man, do we have a topic today that is very relevant. It's tax season, or I like to call theft season. And we're going to try to stay out of jail today. We're going to talk about what it means when it comes to taxes related to your digital assets. That's very important. And there's a lot of changes that are coming up. And we got the perfect guest to dive into that, to talk about things that we need to be aware of, not just for this year, but maybe even in the coming years. His name is Patrick Camuso, and he's got a lot to say. He's got a company, CPA.com. He's the managing director. But Patrick, I know we got a short little go at this first segment here, but I want to go ahead and bring you on the stage, get things started. So you were kind of one of the first CPAs to really dive headfirst into the crypto space back in 2016. So what was it that made you bet your career on this?
Well, I was an early adopter as an investor in Bitcoin myself. So I was a believer in Bitcoin and in, what we've seen this do over the past decade plus in terms of it progressing and becoming part of the financial infrastructure. So I saw that early. I bet my investment portfolio on it and also my career, and really saw that, we're going to have more adoption with this. There's going to be a lot of tax and accounting questions, and I was able to get in early and start to grow with the industry and grow with all the questions that have come up over the past decade as they've arisen for investors.
Yeah, and I'm sure there was a learning curve along the way, or because obviously you're walking in a realm where parameters were not really set for the most part.
Yeah, very big learning curve because the tax characterization is unclear for a lot of different transactions. Of course, back then, even through to today, and there's a lot of accounting challenges with the nature of these transactions. They're financial transactions that occur a lot of times at a high volume on chain with a lot of data issues. So it does really combine many different skills if you're going to be able to be successful in this space as a CPA. I did come from a strong background working in the Big Four at Deloitte in the financial services space. So before I dove into Bitcoin, I was deep in tax, working with hedge funds and mutual funds and these types of companies where I was dealing with large sets of financial instruments that we had to look at and apply tax characterizations and tax adjustments too. So I built a good background for it. I got into the industry early and, really learned it firsthand, and did have to struggle through the learning curve and kind of, building this all out before there was guidance and before there was a playbook or, another firm that could show me what to do. I kind of had to, tread and create my own trail.
Yeah, well, props to you. Props to you because it's definitely a lot of work being a trailblazer. But if you guys are watching this program, we got a lot to unpack, a lot to go over. These things are all going to be relevant to you if you have cryptocurrency in your portfolio. So stay tuned, stay put. You're watching The Money Block, and man, it's going to be a jam-packed show. So call a friend, tell them to tune in. If you're watching online, hey, be a part of the conversation. Comment, let us know what you think. We'll be right back after this break. What does it mean to be physically, spiritually, and financially free? The right to life, liberty, property, and the pursuit of happiness, these were the ideas that made America. But what happens to these ideas when America's money becomes compromised? What do you do when the very thing that you're working for day after day is fundamentally designed to enslave you? Whether it was a conspiracy or not, you won't believe what is about to happen in this country. Arm yourself today with the truth and build your life on the foundations for liberty. Rediscover freedom in the 21st century and grab a copy of my Amazon best-selling book, Foundations for Liberty. For just $11.99, you can support this radio show by finding a copy on Amazon or by going to mattjmoore.com. Again, that's mattjmoore.com. Don't wait, because freedom is never more than one generation away from extinction. And welcome back, ladies and gentlemen. You are tuned in to the Money Block. This is segment 2, round 2. And man, we are syndicated coast to coast here in America. And if you're watching on television, well, be sure to call a friend, tell them to tune in, because we're talking about taxes today. Whether you like it or hate it, we got to talk about it. And we got the perfect guest to do it. And we're going to bring him on, ask him a lot of good questions. But for those of you who are new to the space, or maybe you've been a veteran in the Bitcoin crypto space, this show's going to be full of knowledge. And so I would just say that you put on your thinking caps and be ready. Take some notes. Get out a pen, take a note. But if you are new and you've got a lot of questions about the space, about the philosophy around the space, maybe you don't even know what the term sound money means. Well, be sure to scan this QR code. You're going to see a QR code pop up right over there. That is a copy of my Amazon best-selling book. It's a digital copy, free download. My way of saying thank you for tuning in. Super appreciative of you watching today's program. So go ahead, scan that, and that's on me. Free gift. All right, well, let's dive into the content today. We got lots of questions that I've got for our guest today. His name is Patrick Camuso. He's the managing director of his own company called Camuso CPA.com. And Patrick, I want to pick up the conversation here. When before we went to break, we were kind of covering your background, how you kind of dove into this space. I think it's important for people to have context there, because it is the wild, wild west to some extent. It's, as time goes on, it's less that. But let's talk about this. It's now 2026. What's some of the biggest changes or challenges that that investors are feeling right now when it comes to taxes and digital assets?
Definitely. So 2026 is a big year for digital assets. We're entering a new era, or a new phase for tax reporting, where before the tax year 2025, which is obviously being reported in 2026, before this, everything was self-reported, and the IRS really had no visibility into the transactions that were occurring across exchanges and on chain. And that's really changed now with Form 1099-DA. And, taxpayers and practitioners, this is the first year that they're getting these forms, and they're having to reconcile them with their transaction data. But the long and short of Form 1099-DA is that the IRS is receiving transaction data from brokers that are reporting the transactions independent of anything that a taxpayer will report on their return. So, there's a lot of considerations around that regarding the tax implications to that, and I'm sure we'll get into that. But I would say overall, the biggest change is Form 1099-DA being implemented and rolled out across the country to taxpayers.
Yeah, so 1099-DA, I got my first one this year. I did sell some Bitcoin, some crypto, just lifestyle changes in itself. But, most of us are here to hang on for the long term. That's been my goal. And majority of my portfolio, I hang on for the long period of time. So my question to you is, when we get these forms, in the past, I've been using software like Sum, which I know you're probably familiar with Sum. And it's been very helpful in order to make everything compiled in a way that I can just give to my accountant, and they can help me through that reporting process. Do I need to be giving the 1099-DA to them, or just my report from Sum?
Well, you're right, because the 1099-DA has now created an extra step. The first step, like you've briefly outlined, is you need to do your own accounting of all of your transactions, because the 1099-DAs are usually going to be incomplete. usually not going to include your full cost basis details. It's also not going to include non-custodial activity. So you can't go ahead and blindly rely on these 1099 DAs and go and file them. If you do that, you could actually over-report and under-report in the same year, because you can over-report your proceeds from the 1099 DA and maybe under-report any non-custodial activity that you had that may have triggered taxable events. So it's very important that you first do your own calculation, but then you do have to take this next step of what you've calculated, now comparing that to the 1099 DA and reconciling that, because again, the IRS is getting this 1099 DA independent of any of your tax reporting. So now you have to take this extra step of what is the 1099 DA reporting from what exchanges, comparing that to the calculations that you've done, and then reconciling those, and then reporting them appropriately with any necessary adjustments to what was on the 1099 DA compared to what you reported if your cost basis is inaccurate. So you do have to take that extra step and reconcile it. Whether you do that within some or you do that within another reconciliation flow you set up is another question. But a lot of these softwares are rolling out features where they're going to assist with that process of reconciling the 1099 DA, because it's now another step to digital asset compliance.
Yeah, I mean, so the form itself reports the gross proceeds, but not the basis for, let's say, 2025 trades. Could this be a big headache for some? Because what I noticed was I got the 1099 DA, but my sum report showed greater tax obligations when it comes to capital gains. So walk us through that. Is that being a headache? You would probably rather see a greater number on the sum report than compared to a lower one, right?
Yeah, well, ultimately, you have your transactions that are taking place across wallets and exchanges, and then you have your calculation that's happening in whatever your software of choice is, and now you have the form 1099 DA, and then you have your tax return, right? So you have like 4 levels of data sources that you have to reconcile together that aren't necessarily designed to do so. So there is friction for people, and that friction takes the form of discrepancies between the two that, again, like you have to report appropriately on 8949 with the proper adjustments, and you really have to get down to what is accurate. The 1099 DAs aren't necessarily going to be accurate, but if you're going to rely on your calculations, you need to make sure that they're done with the correct methodologies and they're documented, and all the tax positions you're taking are appropriate. So ultimately there is that friction, and you have to get down to the right answer. You can't just rely on the 1099 DA or vice versa. The other friction point I see is that even according to the IRS, and I see this in my own practice, there is a very high non-compliance rate overall for digital asset tax reporting. And even for many people that have been compliant, their historical calculations may not have been accurate. There's many challenges in doing the digital asset accounting. I don't want to belabor that too much unless you want to dig into all those challenges, but there's many data challenges, tax characterization challenges, steps that you need to take for due diligence to ensure accuracy around all that many taxpayers and even practitioners don't take. What does this lead to? It leads to inaccurate calculations, and that's not a problem just for the current tax year. This can follow you into future tax years, because your ending calculation for 2024 is your starting calculation for 2025, and so on. So cost basis tracking is cumulative in nature. So what we see a lot is people are getting the 1099 DAs. They need to go and report this, and they're realizing their cost basis calculations may have cumulative inaccuracies in it that can extend, to many earlier tax years. And then we have to go back and unwind all that and calculate it correctly, from the beginning to even get to a point to where we can say, all right, this is our true calculation. Now let's reconcile this with the 1099 DA. Yeah,
and not that anybody wants to pay more taxes than they have to, but over-reporting is probably better than under-reporting, right?
I would say, there's less of a tax risk in the event of an audit that you're going to have, a tax adjustment that's going to go not in your favor.
Let's say it's a couple $100 more than is that really going to trigger an audit if it's like a couple $100 more on your sum report versus your 1099 DA?
Yeah, that's a very good question, and there's a lot of people sort of putting out different ideas about this, and when are we going to start seeing matching errors, and what level of materiality is really going to trigger this? And I think it's an open question. And it's going to be interesting to see how quickly is the IRS going to start to, roll out matching and issues with this, and what the level of materiality is going to be. This is a new form, so it's hard to say. Will these small differences like $100 from an administrative standpoint, I don't know if that's going to be, with the best use of
Their
the
time.
the IRS to pursue that. I think the point of the 1099 DA was there was a really low level of compliance, and this is going to push, a higher level of compliance. So, the small differences when we're looking at these, we want to file the return accurately, right? Like, we don't rely on the 1099 DA. Like, we want to file it accurately. So if there's differences, whether it's higher or lower, if it's accurate and it's defensible, that's really what we want to be reporting. Because at the end of the day, if your return gets scrutinized, you can't just point to the 1099 DA or to the tax software or to anything else. In a civil audit, the burden of proof is on you as a taxpayer. So you need to be able to defend all of these positions. So, these smaller differences raise less of a concern for me if we're talking like, your proceeds don't match by $50 or $100 and you're maybe reporting, $100,000 in gains. Is that the highest concern versus people that have more material differences? I would tend to focus more on the material differences. But the verdict is out on, to what degree we're going to see these match notices, and also what the timing of it is it going to be. Some people tend to think it's going to happen quickly. Some think it may take a few years to roll out.
Well, we got to run to break, but when we come back, I want to dive deeper in this. I got a lot of questions I want to ask you. So if you guys are watching, stay tuned. We got more great content. We'll be right back after this break. Welcome back, ladies and gentlemen. You are tuned in to the Money Block, and we are back in action. So thanks for tuning in. We are coast to coast on BizTV. And man, do we have a treat for you today. We are talking, obviously, about Bitcoin and cryptocurrency, topic of the show, as usual. But for those of you who are new to the space, maybe you've been involved for a while, you've got crypto in your portfolio. This is the time of the year that we got to think about paying the tax man, unfortunately, and being compliant is part of that. And so we have a guest today that's going to help us unpack some of these things. I got a load of questions for him, so get out your notebook, take notes. And in fact, if you're watching online and you want to be a part of the conversation, be sure to give us a like, comment, subscribe, be a part of the conversation. But today we've got Patrick Camuso. He's the managing director of a company called Camuso CPA.com. He knows a thing or two when it comes to taxes. But before I bring him back on to the stage, I just want to let you guys know, you think about America, you think about the founding, you think about the money we use today, and there's a lot to consider, a lot to learn. So don't be overloaded. In fact, you're going to see a QR code right here that pops up on the screen. Scan that, download that. That's a copy of my Amazon best-selling book, Foundations for Liberty. Be sure to get a copy of that. It's my way of saying thank you for tuning in. Because we live in interesting times. We're, over $36 trillion in debt. We use a fake fiat money, and our life force is being sucked out of us every single day through inflation. But despite being unable to pay that debt, we still have to pay our taxes so we don't go to prison. So let's do this. Let's bring it back here to the focus of the conversation, which is with Patrick. We're going to talk taxes. We're going to talk about liability here. Patrick, I want to start the conversation here. There's obviously liability for the taxpayer, but you've also made mention that there is now liability for the tax preparer. Can you speak on that? What kind of liability are we talking about? Even if somebody like myself is using a specialized software to help me figure out how much I owe in capital gains tax for my crypto.
Yeah, well, tax preparers are to a degree responsible for the positions taken on returns that they sign. They have to, with a reasonable degree, verify that what they're claiming is accurate, including, for instance, like if you're reporting cost basis data related to a digital asset transaction. So, if something is materially off that a client may have given them from something self-reported, just saying, I just relied on what my client gave me, or my client software said this was accurate, isn't necessarily going to be a defense. And, there can be repercussions for preparers, such as pay preparer penalties. So, the long and short of it is that preparers need to perform some level of, independent due diligence and reconciliation regarding these transactions. And, this complicates it because with 1099 DAs going out and we see more digital asset adoption, there is more and more people that are transacting in this. And this is new territory for a lot of CPAs that don't necessarily specialize in this. And that, creates an additional requirement that they have to sort of get up to speed on all of this to even be able to accurately file these returns and take positions themselves. So, what we've seen at Camuso CPA related to this is demand from other firms that are reaching out to us and, partnering with us and, having us manage this digital asset accounting process and cost basis reconstruction process so they can confidently file their returns knowing that, there's been a good methodical process and due diligence done on the cost basis calculations.
So, okay, let's talk about this. For someone who's got transactions across multiple wallets, multiple exchanges, what's the smartest way to kind of get their records cleaned up, especially, if they've been doing this for a while?
Yeah, so, the first thing I would say, the question I get a lot is, can I just start from, this tax year or last tax year? And the answer is usually no. If you have assets that you purchased one year and they carry over into a subsequent year, you need to start from when they were first purchased to get an accurate cost basis calculation. So, really the first step is getting every single wallet you've ever used, every single exchange account you've ever used for every year that it was active, and getting your hands on all of that data. And if we're talking about going back 5, 10 plus years, we do that a lot at my firm. There can be gaps with defunct exchanges and other related issues. So really you want to start there, and then you're going to have to take all of that data, leverage tools like you've mentioned to start to aggregate all of that transaction data. And then you're going to need to actually get into the data normalization, because there's going to be potential data issues because none of this data is standardized across exchanges or wallets or chains. You're going to have to deal with the tax characterization issues, and then just reconcile everything together and do your due diligence. And throughout that process, you may realize there's ambiguous tax positions you have to take. There's data gaps that you're going to have to address related to your cost basis. You need to make sure that you're documenting all of this appropriately and contemporaneously as you're doing the calculation. So there's no like real trick to it. You're going to have to gather everything together and then do a deep reconciliation. But what I would say is that documentation and due diligence are what really matters. What I see a lot of people is they'll take these wallets and things, they'll plug them into a software, and the cost basis may be inaccurate, the tax characterization may be off, and a lot of this comes down to due diligence. Does your calculated ending cost basis tie back to your actual ending cost basis, in across exchanges and wallets, for instance? Like, these are simple checks that we see people overlook. So that's the step that you want to take. And the last thing I would say on that is, after you've done all that, it is no small undertaking to go back and reconstruct your historical accounting. If you have many years in complex on-chain portfolio, stay on top of it. Start to do this on a quarterly basis, or at least on a yearly basis going forward, so you don't lag behind on things. And the other thing I would say is, when you're doing the calculations, the cost basis, it gets more complicated as things go along. We have the revenue procedure 2024-28. So the way that things even get calculated start to shift throughout the year. So you want to really keep an eye on all that.
Yeah, so I have a very deep question I want to ask regarding that topic, but I don't have enough time to cover it in this segment. So when we do come back into the next segment, I want to follow up with a question on this topic that we're talking about, especially when it comes to, being compliant with past stuff that,
Yep.
maybe you were involved in using all sorts of products and services and platforms, different crypto assets. As time has gone on, I've reduced how and where I do my transactions and my participation in this ecosystem because of the headache. But before, we do have to go to break. With about a minute left, are there any practical moves that you're seeing high net worth individuals do?
From a tax planning perspective?
Yes, tax, yeah.
Yeah, the most practical one that I see becoming overlooked that I think applies to most people is that there was this change with the revenue procedure 2024-28. So everything's accounted for wallet by wallet, account by account. So if you structure your wallet architecture and flow of funds properly, you can gain a lot of control over the timing of your tax events, whether you want to, defer gains or accelerate them if you have different tax lots. If you have Bitcoin with $100 basis in one wallet, a $50,000 basis in another wallet, which wallet you dispose from matters a lot under this revenue procedure and under this new accounting methodology. So planning in advance for that can actually offer, some tax benefits if you're strategic about it.
Okay. All right. Well, guys, you heard it from him. We're going to head to break, so I want you to stay put, stay tuned. We got more great content coming your way. We're going to be talking about, do I need a tax attorney if I've been in this space for a long time? But stay put. We'll cover that when we come back from break. We'll see you in a minute. And welcome back, ladies and gentlemen. We are back in action on the Money Block, syndicated coast to coast on BizTV. We want to thank you for tuning in if you're listening to us or watching us on TV. And man, this is the place for you. If you're in crypto or Bitcoin, maybe you've been investing in a while, maybe you want to learn how to invest. Well, when you invest, you got to pay the tax man. Despite my name being Matthew, I not a big fan of the tax collector, but we are going to have to go there because, hey, we want to be compliant and stay out of trouble. But let's just remind you here. There's a lot to learn in this space, and that's okay. Don't feel overwhelmed. That's why we bring guests on like this. This is why we have conversations like this. But the education is ongoing. So if you want to continue to learn about maybe why the certain philosophy that has bloomed in this crypto space, well, you can download my book, Foundations for Liberty. There's a QR code that's going to pop up over here. Be sure to scan that. It's a free copy. My way of saying thank you for tuning in. I really appreciate it. But on the line, we've had a wonderful guest. His name is Patrick Camuso, and he's got a tax firm, but he specializes in crypto. And Camuso CPA.com is the website. But before we went to break, we were talking about what it's like when you've been in the space for a long period of time. Maybe you have lots of wallets, lots of exchanges. Maybe you've dabbled in DeFi. This, in essence, this space has been the wild, wild west for a long period of time. New emerging asset class, not a lot of rules to the road. That's what attracted a lot of people into this space in the beginning. But as time has kind of progressed and the government has gotten more and more involved and up our butts, excuse my language here, but as you can tell, I'm passionate about this, but I want to make the point here that I have been self-limiting myself by choosing how I interact with exchanges, what exchanges I use, if I'm going to participate in DeFi, what kind of wallets I'm going to use, how many wallets I'm going to use, because if you don't know what you're doing and you're not using the right software to track these transactions, these capital gains, you're going to be in a world of hurt and a lot of headache. And we've touched on that through the past segments that we've been on here. It's very unfortunate that this is the case. But I do want to bring this up to attention here. I haven't received one of these. My friends haven't received one of these, but I saw on the internet people who've been involved in crypto receive this special form when it comes to getting an audit from the IRS based off of your past crypto activity, and they require you to go through this list of all sorts of exchanges, all sorts of wallets. You got to check which ones you've ever used or not used, and but the thing is there's penalties of perjury involved here, and they want you to sign this. And for somebody who's been in the space for almost 10 years, I can tell you right now, I can do my very best to go back and remember, especially, if you haven't been self-limiting yourself, it's going to be extremely hard to remember how and when you did things. To me, it just seems like, man, this is just totally unfair to some extent because, there were no software rules to the road when you were doing this stuff 10 years ago. But let's talk about this. Dude, if somebody receives one of these forms, should they be getting a tax attorney involved? Because you could be criminalizing yourself just because you don't know, you don't remember.
Yeah, this is challenging. Firstly, the reason why this form exists goes back to the fact that these cost basis calculations are cumulative in nature. So, if you're missing a data source maybe from 2019 or, not considering that, that can still impact the calculation through 2025. So, I did see a lot of comments online extremely critical of this, and I do understand why. But in the same regard, when our firm is onboarding a new client, we're asking them similar questions. Give us every exchange that you've ever transacted on, give us every single wallet you've ever transacted on. Of course, when our firm does it, it's not under penalties of perjury. So this is a real risk for a taxpayer, and it comes back to the fact that, if you've been transacting on chain, these are highly complex financial transactions that you as the taxpayer have the burden to report. So, if you've been transacting, you really need to start to do your own calculations and start to see where these data gaps are. So if you get one of these forms, you're able to say, I've had activity on these exchanges, on these wallets, because, you may want to speak to a lawyer, but at the end of the day, you're likely going to have to respond to that. And when we're doing these calculations at our firm, people give us their wallets, their exchanges. It almost is a forensic exercise, and we, more often than not, we're going to find missing wallets that you forgot about from like 5 years ago, or we're going to say, hey, it looks like you were on Binance 7 years ago, you transferred some Ethereum there, you didn't tell us about that. Like, what's the nature of this? So these types of issues do shake out.
Well, to your point though, you mentioned earlier that there are even some exchanges that don't even exist anymore.
Yes, that's true. They don't exist. And when you have those gaps, you can disclose that, and in your accounting, you can document that, and you can treat the calculations conservative in nature related to your basis. It gets very contextual how to treat those depending on the full facts and circumstances. But there is this challenge. I understand why the IRS needs the data though, because they're going to need to do a full cost basis calculation in the same softwares that we're using to a certain degree. So this is the problem of the taxpayers have the burden of proof for anything they're taking a position on their return, and when they sign the returns or sign any of these representations, it is going to be under the penalty of perjury. So it's imperative that you don't wait till you get one of these notices and then have to figure out 10 years of your history. You should be, coming to a firm now to unpack all of this and go through the data intake process, go through the reconciliation, and you'll see where the gaps are. And, part of what you should have produced from your calculations every year is a list of every place you transacted and every exchange you transacted on. So there is a big risk, but the risk really stems from the fact that, people have this historical non-compliance and, this accounting debt that can extend.
But let's be honest here though. This most of these people aren't necessarily trying to, there are some that are purposely trying to not be in compliance, but some of them, it's just ignorance and the newness of it all. And so it's like, I just think it's very unfair. But
I don't disagree with you there that, not every, like some people, over the years, this space, not everyone did want to be compliant, but many people that did want to be compliant, it's just, there's data issues. These softwares are not plug and play. There's tax characterization questions. There's limited numbers of professionals like myself that are up to speed on this that can guide you. So, I have deep compassion for the taxpayers that want to get into compliance and can't, because I talk to them on a daily basis. So, to that degree, I do think that there could be some paths in the future where, we can have the IRS could have a forgiveness program where, taxpayers that have this large amount of non-compliance can maybe have a path to compliance that would be less severe with penalties and other repercussions. But overall, this is just a big compliance issue where I understand the taxpayer side where they're just like, how am I supposed to comply with this? But for the IRS to start pushing compliance, basically they're pushing the Form 1099 DAs, and then, during the audits, they're going to want to collect all the information because it's really the only way to even start to parse out what happened here. So it's just a huge issue all around. And, the biggest issue is that at the end of the day, it falls on the taxpayer. The burden of proof and, the penalties of perjury are on you as the taxpayer when you file their return. So, it may not be fair, but you need to be getting in a position to really make sure you protect yourself.
Well, in my personal opinion, having a tax attorney is going to be important. But also, a lot of us who've been in this space, and maybe those who are wanting to be compliant, like myself, you want to stay out of prison. But here's the thing: you want to make sure that you have an accountant that knows what they're doing, and that's why people should call you specifically. But for somebody like myself, or somebody else, maybe they thought their accountant knew what they were doing. And maybe the accountant said they thought they knew what they were doing. What kind of advice would you give to tax professionals who, are out there? Is there any kind of special advice that you would give them and not necessarily the taxpayer?
Yeah, it would go back to the liability that we talked about, because I see this a lot. Most people that come to my firm and, maybe they've self-calculated or maybe they've worked with other professionals, their calculations are usually inaccurate. A lot of times some of the tax positions and, tax characterization they've applied to certain transactions is aggressive and undocumented. So, there's a lot of that. Just anywhere there's a big challenge, there's a big opportunity. So, every bull market I've seen sort of new CPAs, hang their shingle as a crypto CPA, and, maybe they haven't went through the pain and work that it takes to really build an expertise in this space. So, there's definitely that. So it's challenging to find the right professional, and you do want to work with, a good CPA. CPAs can help you with audits and represent you with the IRS, and tax attorneys can help if you need more confidentiality around your conversations with them. But overall, there's a risk for practitioners, and I would say for taxpayers themselves, selecting a crypto CPA is somewhat of a minefield still to this day.
Well, all right. Well, we got to go to break, but we got more questions coming right up for our guest, Patrick, and I'll give you a place where to find him if you want to use his services. We'll be right back. AI is here, money is changing, but freedom has never been more important. I'm Matthew J. Moore, the Money Block host on BizTV, Amazon bestseller, and Bitcoin policy advisor. Book my up to 60-minute talk, Redefining Wealth and Freedom God's Way. I'll teach your church, business, or civic group how to secure money, freedom, and faith in the digital age. This is urgent, so I'm slashing my fee from $1,000 to $500. Cover my travel, and I'm there. Scan the QR code now. Spots are filling fast. What does it mean to be physically, spiritually, and financially free? The right to life, liberty, property, and the pursuit of happiness, these were the ideas that made America. But what happens to these ideas when America's money becomes compromised? What do you do when the very thing that you're working for day after day is fundamentally designed to enslave you? Whether it was a conspiracy or not, you won't believe what is about to happen in this country. Arm yourself today with the truth and build your life on the foundations for liberty. Rediscover freedom in the 21st century and grab a copy of my Amazon best-selling book, Foundations for Liberty. For just $11.99, you can support this radio show by finding a copy on Amazon or by going to mattjmoore.com. Again, that's mattjmoore.com. Don't wait, because freedom is never more than one generation away from extinction. And welcome back, ladies and gentlemen. This is the Money Block, the final segment of the Money Block. And we're syndicated coast to coast on BizTV, here to educate you about crypto, Bitcoin, and unfortunately, taxes is a part of that. And so we do have to have a guest to talk about that, to prepare you and hopefully if you are in the space and you're in need of a CPA who specializes in the crypto perspective and asset class, well, this guest is the guy to call, and we'll give you his contact information here. But just to remind you, I'm giving away a free gift. It's my Amazon best-selling book, Foundations for Liberty. You're going to see a QR code pop right over there. Get out your phone, scan that QR code. My way of saying thank you for tuning in. Really appreciate it. But let's pick up the conversation here. On the line, I have our guest, Patrick Camuso, and he's got a CPA firm. And Patrick, before we kind of dive back into the nuts and bolts of everything, I want to be very specific here. Where can people learn more about your services, find you, hire you? Can you give that information?
Yeah, absolutely. So, we're happy to have an initial consultation and really sit down with anyone transacting in digital assets that needs help on the accounting or tax side. And the best place to reach me is at CamusoCPA.com, CAMUSO CPA.com. And that's an M, not an N.
So let's dive into this here. A lot of people get into the crypto space for many different reasons. And I would say that with the development of artificial intelligence, with the ever-growing popularity of digital assets, there's a large cohort of people in the crypto space that got into this space to maybe try to fix the problems of our current monetary system. Maybe it was monetary sovereignty. But there's an overall cypherpunk vision of the space. And it just seems that as things have matured more and more, which is inevitable, especially if it gets adopted. I'm not saying that's a bad thing, but artificial intelligence is going to make things a whole lot easier to track and trace things. Are you, and I don't know what got you into the space, what your motivation was specifically, but are you concerned at all about maybe a George Orwell situation where you got these machines and the government's with these machines and you're tracking and tracing information? What do you see on the horizon for this space? Should the regular taxpayer be concerned about the movement towards a pure digital monetary system?
Yeah, well, what I would say is transactions on chain have always been visible, and that visibility is just going to increase and get easier, for regulators to really start to, gain and utilize from, a tax enforcement perspective overall. And I agree with you, this was kind of inevitable. I think we're entering what I call digital asset compliance era. And a lot of that is because we've seen the institutions come into the space. And, we've both been in this space for a long time. I got in it for, these ideas of financial freedom and really believe in Bitcoin and still do. But at the same time, the industry has always had this idea like we're going to get mass adoption and we're going to get institutional integration. That was always, somewhat of a goal or a hope for, all of us early adopters. And, from my perspective, this regulatory infrastructure was always going to precede that institutional adoption. So to a certain degree, it's inevitable. And, the cypherpunk deal where you have no regulation, no tax reporting, it's not going to be sustainable once you hit mass adoption and the institutions come in. There's going to be some level of compliance that you're going to have to come to the table and meet them with. So I think that's what we're going through now is this digital asset compliance era. And the cypherpunk ideal, a lot, that was preached a lot in the early days. You don't have to pay tax on this and all this type of stuff. My whole point for years was these transactions are happening on a public immutable ledger. To the degree you're committing tax fraud, there may or may not be a statute of limitations. And, these transactions are never going away. So as we start to see enforcement capabilities, increase and transaction visibility rise, I do think that there is a real risk for taxpayers, especially taxpayers that are not compliant. And, these transactions are basically just kind of sitting out there on chain. I think that's the issue. But I think blockchain never really had the promise of full financial privacy, just because they've always been public and immutable. I think the non-custodial ownership and controlling your own assets without an intermediary and having an asset that's maybe, not correlated to a specific country. I think there's immense value in that. But the financial privacy and the transaction visibility has always kind of been built into most of these blockchains, I would say.
Yeah, I mean, I agree in the sense that, it's inevitable to, and I think that the mission of protecting us from inflation, like things like Bitcoin, being able to be your own custodian, being able to control your own assets, that's still going to be an important part that you can, do commerce around the world. But what are your, and I know I'm just kind of getting into more of a philosophical thing here, but what is your take on, there's a big push on making sure fungibility still plays a part in this, and therefore there's big privacy initiatives like, let's say, Mimblewimble on Litecoin, or, got Monero out there, which is a little bit more extreme. Do you think that the privacy play is going to be a thing that takes on more popularity? And if so, I'm not here to advocate people to not be in compliance. I want people to stay out of trouble. I'm not saying don't pay your taxes. I mean, I will complain about taxes, but I'm not saying don't pay them. but what's your take on the whole privacy movement? We got a couple minutes.
I think privacy on chain is going to be big going forward. Not everyone, everyone I send a transaction on chain, I don't necessarily want them to know my whole financial picture, right? And right now, to a certain degree, that can be done. So there's going to be the question of that, and I think there's value there that can be added to people. Also, there's the question of KYC and wallets, and what does on-chain compliance look like as we start to move into the next iterations of this, because it's really, in my opinion, not going to stop at the 1099 DA. So what does on-chain compliance look like, and what role does identity play at that level with transactions on chain and at the wallet level? So I think privacy and these conversations are going to be one of the defining debates and conversations that get had in our industry, as we move forward here. And I think, there's two sides to it, where regulators need a certain degree of visibility into transactions and identities to ensure compliance. And of course, individuals want a certain degree of financial privacy as well. So really, how is this all going to play out? I think it's going to be something that is defining for the industry over the next few years.
And one more time, where can people find you, get your services?
Yeah, so anyone that wants to reach out can reach out to me at CamusoCPA.com. That's CAMUSO CPA.com.
Love it. I love it. Well, thanks so much for joining on the show. This was a great topic, very timely, that we needed to discuss. And like I said, if you are watching this show and you need a CPA like him, well, reach out to Patrick. He's the place to go. You'll see his website on the screen. All right, guys, thanks for tuning in. We'll see you same time, same place. Adios.
The opinions and suggestions expressed on this program are solely those of the participants and are not necessarily endorsed by program sponsors or any station, media company, or platform broadcasting this program. This program is a product of More Media, LLC. The information in this broadcast is not intended as investment, tax, or financial advice. Matthew Moore is not a licensed investment advisor and speaks solely from his experience and opinions. All information in this broadcast is for entertainment or educational purposes only. Matthew Moore, More Media, LLC, and the company or platform broadcasting this program is not responsible for the success or failure of any person's investment decisions or purchases. Matthew Moore, More Media, LLC, and the company or platform broadcasting this program makes no and expressly disclaims all representations, warranties, and guarantees with respect to this broadcast and its sponsors. Investing in any market is inherently risky and can be financially dangerous. Invest at your own risk.